Good morning all and welcome to this morning's video. So this morning I have 4 pairs on watch. There's been no opportunities this week that I've been able to get involved with so far. Lots of movement but nothing in the way of opportunities as per usual, but that may change. We don't know what the market's going to do next. So the 4 pairs on watch I have today are Aussie Kiwi, Pound Swiss, Euro Yen and Pound Yen. Aussie Kiwi is my favourite of the bunch, but looks the least likely to shape up at this moment in time, but we shall see. We have this high here. We have the near misses to the high. Okay, eventually we take out the high that we keep near missing to. We break above, catch people the wrong side of the market, and then push to the downside aggressively. Okay. We then break the low here. We break this little area of consolidation, break it impulsively, and then we correct underneath, giving me a clue that this is just an impulse correction continuation to push lower to potentially take out this low, maybe go even lower, but certainly down to this area as a solid first target based on what we're seeing at the minute. Okay, so if we just zoom in, you can see this wick here. Okay, a lot of the time these wicks get filled, but not always. If they've wicked above an area of value, they don't necessarily need to be filled. But what we do have here is we have this daily candle yesterday, okay, which closed very, very bullish, giving me a clue that potentially there's enough buying pressure here to take out this wick and to fill this wick. And as we drill down, we shall see potentially why that is. Okay, we have this area of consolidation here. So we have this 1, 2, 3. Notice we didn't break above. We don't always have to break above, but we do have that kind of 1, 2, 3 structure there with the middle section. Okay, and we haven't yet fulfilled all of that potentially. Okay, so if we just zoom in a little bit, you can see. So on the 1 hour chart, you can see that the start of all of this consolidation was here, and that was what I was talking about, wicks potentially being filled. So if the origin of the move, so the origin of all of this is there, and we have a wick which is wick to the area, and it's wick to it on multiple time frames. If we just switch to the line chart, you can't see that wick. Okay, that gives me an indication that we may pop all the way back up to there. Whoops, what is going on here? Let's take that off. Okay, that's given me a clue that we may come all the way back up to that area of value. You can see we're not near it at the minute. But what I'll be looking for regardless is the following. Just going to try and keep these videos as short as I can now. Okay, when I can. Okay, so I'm looking for a tap into that area of value. Given the size of the structure, I won't be looking for risk entries from the top there. I'm sure there's numerous ways you can get short here with your risk entry, but I'm not interested in that just because of the size of the structure. So just looking for a tap into that area of value, push down, and then either a 5 or a 15-minute continuation, and then I'd look to get short on the break or within it, and then I'd be able to manage it. Let's say we pushed up from here. I'll be able to manage it for something in the region of 3%, and then my target, I would measure the range, and the 90% area is where we often pull back deeply. Even if we're going to continue, we have a sharp move sat just above it where there's likely liquidity. So what I would do in this instance, I would just set the take profit there and trail my stop loss accordingly. Okay, so that is Aussie Kiwi. I've got the alert set. If it doesn't trigger, then it'll be another day of no trades, at least on this pair. Maybe one of the other pairs will shape up. We shall see. So Pound Swiss, we have, so once again, we have the origin of the move, which is there. Okay, we tap above the origin of the move. Then we move to the downside. Price then retraces, so slightly strange price action, given that we didn't tap into that high, and we then move to the downside. So this is not a typical sequence if we're going to move to the downside, but we've kind of negated that strange sequence by virtue of the fact that we've smashed below here, and you can see we're miles below that now. So I'm just seeing this at this moment in time as an impulse correction continuation to push lower to take out that low, and who knows, potentially start tapping into these areas. But that's for the birds at the minute, because we're not going to hold something for that amount of time. You might be thinking, well, we've broken below that. Maybe that means we're moving to the upside. Well, this kind of price action is not typical to then just suddenly blast to the upside and start taking out these highs again. That's not typical. Okay, and if we just zoom down a little bit, you can start to see a bear structure, okay, a reversal structure. When I say reversal, I mean reversal from the little area of value, which you'll see more clearly in a minute as I drill down. So that gives weight to the idea that this is just an impulse correction continuation to push lower. Okay, if we zoom in a little bit more, you can see similar thing as what I was saying with Aussie Kiwi. We have this little bit of consolidation here. We then have this 1, 2, 3 touch structure there. We have the middle section. Okay, yes, this does look like a bull flag at the minute. Okay, but where is it going to? Okay, there is a few little inflection points here, but price didn't really sell off with any aggression from here, giving me a clue that there's not potentially enough liquidity there. I mean, you could argue that is the top of all of this consolidation, so maybe we're getting something like that, but I'm just not seeing that at the minute. What I'm seeing that at this moment in time, okay, I'm seeing this is a stall in price just above here, and then potentially we just drop out, okay? Potentially this is just the stacking of the orders for the next wave to the downside. So what are we looking for here? Given that we have structure to work with, I'm not interested in any long moves here. It doesn't make any sense to get long. I'm looking for a pushback down, okay, back down below this area of value, a 5-minute continuation or a 15-minute, and then I'd look to get short on the break or within it. And then if we measure the range again, what do you know? We've got that little low there, which is at the 90% rule, 90% area. So I would set the take profit there, something in the region of about 6%, depending on the size of the stop loss, and I would trail my stop loss accordingly. So that is pound Swiss. Next up, all very straightforward. This is a bit of a kind of a bit of a what you call a V-shaped recovery. Okay, if we just zoom out, so euro yen, we had the sharp move there. We've tapped into what on my data at least is an all-time high. Okay, we gravitate all the way back there. We get there by way of this kind of massive reversal structure. Break above, catch people the wrong side of the market, and then plummet to the downside. And I'm just seeing this again as a potential impulse correction continuation to push lower, to potentially take out that low there, okay, which this low near missed too. I don't know why. I did have some ray lines on there, but let's just stick those back on the chart. Try that again. There we go. So we have the near miss to that low there. So we have this structure here. It's running channel. We break out. Price leaves a footprint. We have a near miss to it. So it seems logical to me that this is probably an impulse correction continuation to push lower, to take out this low, which this low near missed to, which happened to be the retest of the break of this running channel. So all of that makes contextual sense. If we just zoom in, daily chart, no area of value as of yet. But now you can start to see that we have this sharp move up, sharp move down. So price is likely trying to gravitate back towards that sharp move, which is likely where the liquidity is. And we've kind of got this structure as well. Okay. And if we measure that, we assume that the continuation leg out is of a similar length. That would, if this was an impulse correction continuation, that would take us up to there. So that makes contextual sense as well. So what I'll be looking for is, let's just put those up there. Okay, I'm looking for a tap into this area of value, and then I'm looking for the same thing again, a push down at either a 5-minute or a 50-minute flag. What I am going to be doing is, if we don't quite tap, you see this consolidation there, right? So we kind of have, try that again. We kind of have this and this is the start of the move, but this is the sharper bit, okay? And it's visible more clearly on the 4-hour, right? If we tap into that but kind of near miss that, I'm actually going to be looking for the 15-minute continuation, okay? But if we kind of spike above this area value, tap into the start of that, and then push down, then I will be looking for the 5, okay? So what I'm saying is if we kind of near miss to the start of this consolidation, then I'm probably going to look for a little bit more deliberacy to ensure that I don't get tagged in, tagged out, price taps into that area and then drops, okay? So that's what I'm going to be looking for on Euro Yen. And then we would have, what would we have? The range that we will be working with. So the start of, where is it? What do you call it? Let me just zoom out a minute. So we have all of that range here, but we have a daily low there. So I'm only interested in this range at the minute. And what I would do is measure from there to there. I would set a take profit at the 90% area. And I would trail my stop loss accordingly as well. So pound yen is going to look very similar because obviously it's the sister pair. I'd say none of these look ready at the minute, but within one candle, that can change. I think pound Swiss looks the most likely to be ready at the minute. Pound yen, same thing again. All-time high. Well, not an all-time high, but a 9-year high according to my data. I've just put this slightly lower down just because we have highs above it. And this is a large consolidation relative to the move down, which has preceded it, but it's all good. It still looks good. It meets the criteria. We've broken above, got all the way up to this area, broke above, caught people the wrong side of the market, and then plummeted to the downside. And you can see as we drill down, we have a similar thing again. We have this consolidation here. We break out of that. Price leaves a footprint. We near miss to it multiple times. So it's likely that we'll gravitate back towards the low that we near missed to, which was the retest at the back end of the breakout of all of this. All of that makes sense as well. And then as we zoom down, you'll see a similar picture. Okay, what do you see? You see that little consolidation there where price dropped out. So that's likely where the liquidity is. Once again, if we just measure, where is it? So we have this structure here. I'm looking at this. Okay, this is interesting as well because if we measure this, the continuation takes us up to that area lengthwise, if it's going to be of a similar length. And we also have this consolidation forming here. So this may be a 1, 2, 3 last leg. If we just measure that, that takes us up to there contextually if this was a 1, 2, 3 as well. So with all of that in mind, let me just have a look at Euro Yen a minute. Yeah, Euro Yen's doing a similar thing. Pound Yen's a little bit more, the last leg is a little bit more direct on Pound Yen, whereas if you look at Euro Yen, it's moved up more correctively. So perhaps Pound Yen will be ready a little bit sooner, we shall see. But regardless, what I'm going to be looking for is the same thing again. I'm looking for a tap into that area, a push down, and then either a 5-minute or a 15-minute continuation, and I would look to get short on the break or within it. And then, what I would do, once again, I'd measure from the range, from there to there. And then I would set a take profit there and I would trail my stop loss accordingly. That's all I'm going to be looking for today, folks. As I said, hopefully we get some entries at some point, or I get some entries. I know other people have been taking entries, but I'm not interested in what other people are doing. I'm interested in trading according to what I've seen and what makes sense to me. And if other people are trading and they're doing well, great, fantastic. I'm pleased about that. But if entries just don't make any sense to me, or they're not what I've seen or not what I've tested, and not, more importantly, they don't meet my rules, then I'm not going to take them. It's as simple as that. But anyway, I hope you've enjoyed this video. I hope you've learned something, and I will see you again in the next video. And of course, if one of my entries does shape up, then I will update you as to how that went. Have a great day. Have a great weekend, and I'll see you again soon.